All right, folks, here we are in Trading Art, start of a new series where we're breaking down your losing trades of the week. So if you've got them, do use the form below this video to fill it in. Send us your trades and we'll do yours next week. But today and this week, we've got the failed trade critique request from Tony. So JJ is in the house, my private mentor, to help me break down why this trade lost. So it's a gold 30-minute trade. So thank you for sending it through, Tony. On the 23rd of October, we've got a chart. This is all marked out. We're going to show you why it lost in a second. Now, he goes on to sort of talk about part of the reason why it lost. And in the very bottom here, we've got information around the exit. So he manages these trades by banking half at 10 pips and moving the stop loss to break even, then banking a quarter at 20 pips and leaving the runner until the next resistance or traffic area. So the take profit wasn't that clear, but we can see from the image where the stop loss was. So let's have a look at that image now. Folks, I just realized I failed to mention that Tony actually paid for the strategy. So I went to the website, had a look at what they were charging for it. It works out at $2,500 or just over $2,500 US dollars. So this is a strategy he's bought. We're going to break it down and show you why this trade failed. Let's dive back in. Okay, so here's the trade where he was about to enter. So he was going to enter once it broke that high there of the bull. Stop loss just below that bear there. This is what happened, the aftermath. So he came back down, smashed them out, and then it actually did go in his direction. So kind of gutted, and I guess that's why he wants to know why it didn't work. And we're going to break that down right now with JJ in the house. So this is the trade marked up, JJ. We've got the take profit box there at the top in green, and then we've got the stop loss marked out there. We've got a few other things on the chart here, which hopefully Tony's going to benefit from, and you folks out there as well. So I'm going to hand it over to you, JJ. But before I do, I just want to mark this up and tell people how many pips the stop loss was. 42.8, so about 45. And then he was looking for a 10 pip take profit, which is it's not a lot, really. It's kind of there, like at this level here, and then a 20, let's double that there. And then he was looking to get out the next level, which I believe was probably where his take profit is, which is kind of in this area here, this zone here. So that was the trade in its entirety. I mean, how do you sort of break this down to start off with?
Okay, right. Well, let's have a look at what Tony got right. He got the direction right, but his timing for his entry was off. It's taken him out of the trade prematurely, and it's very, very frustrating when you get the direction right, you get stopped out, you don't get involved in the position again afterwards, and you come back to the chart and you realize that it would have got to your target. That's so frustrating. So what would I not be comfortable with here? Well, the size of his stop loss, the ATR, for example. Okay, when we've got these big candles, this very aggressive sort of down move. Okay, and if we go down to the ATR at the time he takes his entry, it's like a 74, 75 pip ATR, and his stop loss was maybe half that or a little over half
It's
that.
just over half that, yeah.
Yeah. So basically, we know the benefits of a tight stop loss. Okay, it can give us, an excellent risk to reward. However, the market doesn't have to move that much before you're going to get stopped out. So your timing is absolutely essential. So the analysis that he got that right. He's got the direction right. Okay, it is just his timing was off. Candles to me are primarily a point of timing. You get your timing right, you can have tight stop loss and get a healthy win rate. Okay, so what did he do? What caused the market to come back down? Well, let's take a look. There's resistance at his entry, and it's not just resistance. There's confluence at that level. There's institutional confluence at that level. Okay. What were they? Well, first of all, 200 SMA, institutional level. Institutions use these. That's why it's called an institutional level. Okay. If you don't have it on your chart, then it's going to deny you this information. Okay. You can look at the value of those yourself, the amount of times it reacts to it. And tell me in the future if you want to trade right on top of it and right into it. So basically, what we had here is that, but there was confluence with that and there's another institutional level, which was the weekly open. Again, I didn't see that marked on his chart. Okay, so he didn't have that information. So he basically was buying when the institutions were short in the market and continuing the down move. Also, when you get an aggressive down move like this, it's very, very unlikely that the market is just going to reverse and carry on up. What you're going to get is a further attempts to push the market down, which is exactly what happened. And we actually got a setup here to go short. So whereas Tony was looking to go long, institutions were going short, and we had an opportunity to short at the low of this pin bar here. Okay, and if we had taken that short, gone short instead of a long, we could have got about a 1.5 hour trade down to this exit zone. Okay, so he had the direction right, but he took on institutions at an institutional level. And that's what pushed the market down.
You know Blue Guardian as a trusted name in prop trading, but guess what? They're back and they're expanding, introducing Blue Guardian Futures. Futures traders, this is your moment. Blue Guardian Futures is here with a waitlist promo you don't want to miss. Be one of the first 5,000 to grab a challenge and get 40% off plus no activation fee. That's right, zero. Picture this, a smooth 6% profit target, lightning fast payouts, and 24/7 support that's always got your back. And wait for it, a 100% profit share up to 15K. No catches, just pure earnings. After that, you still get an incredible 90%. Want a shot at one of 5 50K futures challenges? Just drop a comment below with your favorite Blue Guardian Futures feature and you're in the draw. So futures traders, get ready. Blue Guardian Futures is launching very soon. Click that link in the description, join the waitlist now, grab that discount and be part of this next level opportunity. Great little breakdown there, JJ. Now, I suppose the other thing that we should probably let people in on is, so, when you say we had a signal here, this is an automated signal from the algo that's helping the guys, the beta testers in the Dynamic Traders Club, find the setup. So we're going to show you in a second how that it did pick this short, and there's something else it picked as well, which you're going to talk about in a second. And before you jump into that one, the other thing we could mention here is that, like, had it not got down here, which is like great to say in hindsight, but people are taught certain ways to get out of trades in the Dynamic Traders Club, and one of them would have been to they would have been moving their stops here, right? They would have been moving the stops here. You would not have got 1 hour at that point. You would have got 29 pips, and what was the stop on that? It was about 43. So you probably would have got around about just over half an hour, but you would have walked away with profit, or you could have taken an exit here and had even a little bit more, and then just moved your stop. So there's a number of ways you can trade it, and we teach people going through the Dynamic Traders Club, or only the beta testers at the moment, how to do that. So there is another trade on here that we would have taken as well.
Oh, absolutely, and it's a great trade. True, it's a great trade. And if Tony was around and he would have got this alert, in an ideal world, then he could have capitalized on this setup. Absolutely great, right? He had the direction right. Okay. So what we got here now is we actually had an alert at this candle here. Okay. It was a great alert for a number of reasons. First of all, we're an uptrend. The market's made a higher high. There's distance, there's scope to the institutional level. So if we enter at the high of this bear candle here, okay, now we can have a very tight stop loss. This is the point about timing. If you get your timing right, okay, you have a better chance of not getting stopped out, keeping with that tight stop. In this case, the market would have gone, to me, at least 1 hour before it hit an institutional level, at which time you could have put your stop loss to break even. Okay. And it didn't even, and if you did, it didn't even come down and take you out of the position. It actually went on to get to the original, Tony's original target, at which point, which I'll let you measure, is, I don't know how many hours that is. I think that's
let's work it out. Let's work it
Yeah.
out. So we would have had the stop to entry there, stop loss there, 22 pips. Now you did mention we may have had a little bit longer, but let's say this is a typical one, 22 pips, maybe 23, 86. So 23 to 86 is it's like that's about 4 hours, isn't it?
Yeah, approximately.
Yeah,
Yeah, not
about
too far
four.
off, three
Yeah,
and a
not too
half
far
hour.
off. Yeah, not too
Yeah.
far off 4 hour. So that was Tony's original, I suppose, extended target where he was going to take the remainder of his trade off, where he'd already taken 10 pips and 20 pips. He'd taken certain partials. I don't know how much, but this is taking the full thing off, right? At that level. And what else could we have done with this trade, or would a typical dynamic trader have done?
With this trade,
Yeah, where would they have got out? Like that's who
where were
Tony
they?
would have got out. So where would we have got out?
I mean, it would have been reasonable to take at least some profits off at kind of this level. Okay, I can understand why Tony had this as his exit. Okay, but we've got a strong move. We're back above the institutional level. We've got pretty strong candles, right? That's highlighting that there's going to be or likely to be more left in the move. Okay, now that we got this strong candle here that's closed on the other side of his original target. Okay, so we could have been looking at this level. Okay, it's a very clear level on the chart. Okay, from a horizontal point of view, you can see that there's a number of touches there, right? So this was reasonable, and to take full profit here would have been also a reasonable thing to have done.
Yeah, and there was a couple of other options. I mean, if you hadn't done that, hadn't take it there, and you didn't want to take full profit, I mean, I would have potentially gotten out about here, and that there. This is how I would have done it, trading with the dynamic traders way. 127 pips, and that's with the 22 pip that's kind of 6R, maybe a little bit less, and that for yours at this level here was 140 with a 22 pip, just under 7R. So some big R's there on that trade. And the other good thing about this, which you didn't touch on, but I'm going to touch on here, is we would have had a trend line down here and seen that this had just broken out of the trend line. And it's like a double whammy. It's closed above the weekly open, broken out of the trend line, and it's our setup. So it was an ideal trade to take. Hence why it got so many R.
Exactly. It was when you put the trend line on, you can see now it's a trend line break. Okay, it's actually, I believe, it's broke out a bit. It's come down. It's retested the trend line. So for anybody trading this, okay, from a stop loss point of view, you've got some protection there, right? The trend line is a place where orders will lay. So if you can place, which Tony didn't do, if you can actually place a level like an institutional level between your entry and your stop loss, you got some protection. So even with the tight stop here, or even if you just come down below the previous low, which is a reasonable thing to do if you don't have to move your stop loss too far, right? If the market would have come down and touched and bounced off this the trend line, again, chances are that trend line would have saved you from actually getting stopped out. This is stuff, obviously, that information that we teach within the DTC. If Tony would like to take this as a lesson or see it as a lesson, then he paid a price for trading at an institutional level, where he was looking to go long and everybody else was looking to go short. To me, that's akin to trying to cross a busy road without looking left and right before you actually step off the pavement. Okay, in essence, that's what Tony done here. Obviously in the Dynamic Traders Club, we actually teach where these institutional levels lay, so you can potentially get your timing better, and in this case, choose not to go long at the point that Tony did.
Very well put. Very well put. Now, what we're going to do, folks, is go and show you that these signals that we've just drawn on the chart with like little arrows here are actual signals that our software's taking. So, I mean, it's all good and proper just drawing on the chart. But what I'm going to do is just prove to you that these are the signals. So this is the software here, and we haven't been pumping out the 30-minute charts. So I've just configured this to take 30-minute charts here and show you that it would have picked these up. So we're currently doing 10-minute and 5-minute. So the guys who are beta testing are getting a lot more chance to get in and out. So let's hit start on this. It's going to play this for us. Let's just play that market out. So this is that same candle there. You can see it with the arrow on it. That's the entry, and we would have the order's cancelled at that point. So that's the candle we would have got in on. And then let's go for the short as well to show you that we would have taken this one. So we'll just update it to shorts only and hit start. And we should have, so you can see here, this is the short taken. So the ones with dots on are the ones that we're looking for. That this is actually the end of the day. So I think underneath that is there'll be, it stops doing everything at that point. But that would have been taken there. And it's not the end of the day. I should say, it's just the end of this time that I've done it. So let's see if that actually changes it. Okay, there you go. So there goes the X now there. And that's the trade that we would have taken. So folks, hopefully you enjoyed this video.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
It's been an absolute pleasure having you back on, JJ, and if you are looking for more, then you can actually get a full mentorship with him, $150,000 value mentorship. There's a link below the video. We're doing the prize draw very close to the end of the year. So if you haven't registered yet, go in there, leave your email. You're going to get to see JJ's track record or some of it. You're also going to get a chance for a second entry in the prize draw by filling in the survey that we've got on the page as well. And we talk a little bit more about the Dynamic Traders series and the Dynamic Traders Club and what we're trying to do here. And last but not least, do remember, fill in the form below the video and send us your losing trades, and we'll pick one of those to examine next week. And the other thing is we've got an episode of the Dynamic Traders series podcast coming out as well, where we're giving you even more nuggets here on Trading Nut. JJ, any final words?
Yeah, nothing left from me. I'm just looking forward to the next one of these reviews, and I hope that Tony gets some value.
Awesome. Well, folks, do remember, hit subscribe, like, and that notifications bell, and fill in those forms below or click the links, and we'll see you in the next video.